Hey everyone, welcome back to The Modest Wallet. I'm Sean, and today we're going to be talking about investing in gold, especially as a beginner. Statistics from the Fed show that almost 24% of all US dollars in circulation were printed in 2020 as the central bank had to ramp up its asset purchase program to prevent a financial catastrophe as a result of the pandemic-induced market crash of February and March of that same year. Now, in this particular environment, gold emerges as an appealing hedge against the destruction that higher inflation rates can cause in your US dollar savings and your investments. The video today will show you how you can invest in gold to protect your assets from losing their purchasing power. Thank you so much for checking out our channel and more specifically this video. Now don't forget to subscribe and maybe even hit that like button if you are provided some value from it and want to make sure you are notified of future Money Made Simple videos. Anyway, let's get into it. What is gold investing and how do gold investments work? Gold investing can be done through a variety of ways, but it's basically using different financial vehicles to gain exposure to that shiny yellow metal called gold, and those vehicles you can use to invest in gold include gold futures, bullion, gold exchange traded funds, and even gold mining companies. Now, gold investors make money through price appreciation. As the price of gold increases, the value of their investment also increases. It is important to note that the price of gold can be volatile and can fluctuate in response to economic and geopolitical situations. Investors can also earn income from dividends or interest. Some gold investments, such as mining stocks and ETFs, pay dividends to their shareholders. And in addition to that, some gold investments like gold-backed bonds offer fixed interest payments to investors. Finally, as we mentioned, gold can be used as a hedge against inflation or economic instability. During times of economic uncertainty or inflation, the value of paper currency may decrease while the value of gold often increases. With that said, owning gold can help protect an investor's portfolio from inflation or economic instability. I'm going to now take a look at a few different ways to invest in gold. First, there are exchange-traded funds, ETFs, and mutual funds, which are perhaps the most popular vehicles through which investors can hold gold nowadays without facing the disadvantages associated with storing it and protecting it. And that's the case if they decide to buy it directly in the form of jewelry or bullion. Back to ETFs and mutual funds. These funds mimic the performance of spot gold prices by either buying and holding bullion or using derivatives such as futures and options to track the price of this yellow metal. When it comes to ETFs, there are hundreds of funds managed by various financial services firms from different corners of the entire world. With that said, these are the two largest ETFs currently offering exposure to gold. That's the Spider Gold Trust, ticker symbol GLD, and iShares Gold Trust, ticker symbol IAU. There are also dozens of mutual funds that offer exposure to this yellow metal gold as well. If you are interested in mutual funds, here are three that you might be interested in checking out for yourself. That's the First Eagle Gold Fund, ticker symbol SGGDX. Then there's the Fidelity Select Gold Portfolio, that is FGDAX. And there is the Sprott Gold Equity Fund, ticker symbol SGDLX. But just keep in mind that mutual funds tend to be more expensive as an investment vehicle compared to ETFs, and there could also be liquidity considerations to take into account when picking mutual funds over ETFs to invest in gold. Moving on to our next way to invest in gold, and that is through gold ETNs. An exchange-traded note, an ETN, is a debt instrument that can be bought through a traditional exchange, although it works differently than an ETF. An ETN actually acts as a bond, but its price moves in line with that of gold instead of supply and demand. This means that the value of the ETN is pegged to the value of an index that tracks the price of gold. Once the ETN reaches its maturity date, the issuer will liquidate the position by transferring the final value of the ETN to the holder of the note. ETNs don't hold gold or any derivative. Instead, these notes are backed by the issuer's balance sheet, and therefore they are considered riskier due to the inherent credit risk. Now, ETNs are not typically recommended for beginner investors. Instead, they are much more suitable for sophisticated traders who might be seeking to profit from, short-term upticks in the price of gold. Third on the list are gold futures and options. Gold futures are an instrument that entitles the holder of the contract to receive the physical delivery of a certain quantity of this precious metal if the agreement is not sold before it matures. Futures contracts expire within 30 days and can be purchased through an online securities broker. The price of gold's front month futures contract, which is the contract that is next in line to expire, is commonly similar to that of the spot market. On the other hand, contracts that expire on future dates often have a different price depending on, the market's expectations of where gold prices might be in a month or even a year from now. Fourth on the list are gold mining stocks, which are another way to get indirect exposure to gold. Here, investors buy shares of companies that mine the precious metal and sell it on the open market for profit. There are two options for getting exposure to gold mining stocks. First, you can buy one or more individual mining stocks such as Barrick Gold, ticker symbol GOLD. There's the New Core Gold, which is ticker symbol NCAU, and Galleon Gold, which is ticker symbol GGO. Now let's talk about our fifth way to invest in gold, which is with gold bullion. Now this is the actual physical form of gold or the actual metal. This is probably what everyone thinks about when they think about investing in gold. A gold bullion, also known as a gold bar, is a big piece of physical gold that weighs 400 troy ounces or around 27.43 pounds. These gold bars are 99.5% gold and they are produced by mints. These mints include the Royal Canadian Mint, the Perth Mint, and the Val Canby Mint. Bullion can be bought from multiple sources, but the process involves more than just going to the shop and purchasing a gold bar. Given the value of each bar, currently sitting at around $712,000 each, there are multiple risks associated with holding bullion. First, unless you are buying directly from the mint or a regulated dealer, you should verify that the gold bar is made of pure gold based on industry standards. There are storage costs that can add up to your expenses and possibly eat up a portion of your gains if the price of gold goes up. Now, additionally, there are safety risks, including the possibility that your gold bar can be stolen unless you store it in a safe place, which generates an additional expense. For example, according to Bullion Vault, the cost of buying 1 ounce of gold and storing it for a month is around $21.76, including around $18 in brokerage fees and $4 in storage fees. And if you plan on holding gold for longer than, let's say, 12 months, storage costs go up to $48 per year. Therefore, the total cost of buying 1 ounce of gold would go from $1,776 to $1,842, which results in a 3.7% holding cost that could easily eat up your annual gains. Last on the list of ways to invest in gold is gold coins and jewelry. Gold coins and jewelry are an alternative to buying bullion if you don't plan to invest hundreds of thousands of dollars in buying a gold bar. Coins and jewelry come in different shapes, and it would depend on the buyer's preference of what kind of coin or piece of jewelry he or she would like to buy to invest in gold. The US Mint sells a wide variety of gold coins that you can buy safely to invest in this precious metal. For example, the Mint is currently offering a limited American Liberty 1/10 ounce gold coin valued at $290. That is 99.9% pure gold. Most mints will extend you a certificate of authenticity for your coins, and you will probably find it easier to sell them or exchange them for other goods with a third party based on the spot price of the gold at the time of the transaction. Also, you can buy rare gold coins that could also hold value as a collectible aside from the value of the material itself. As for jewelry, a well-reputed local store can sell you pieces made entirely of gold, and you can either store them at a place you deem convenient, or you can rent a safe deposit box at a local bank. The same applies to gold coins. So we discussed 6 different ways to invest in gold. So now let's briefly touch on ways to buy physical gold. Investopedia has a nice article highlighting ways to buy physical gold, so let's talk about a couple things they mentioned. Buying physical gold bars online is a fairly simple process. One common way to purchase gold bars is through licensed retailers online. Prospective buyers can browse gold bar products on reputable retail websites such as the American Precious Metals Exchange, abbreviation APMEX. There's the JM Bullion and Wholesale Coins Direct. When you receive the gold bars, it may be a good idea to keep them in their packaging to prevent scratches and store them in a home safe or safety deposit box. One other thing to note is that you will likely be responsible for paying for delivery fees and insurance. Some investors prefer to buy gold from local dealers, allowing them to physically inspect the gold and pay for it in cash. However, local dealers tend to have higher prices than online retailers as well as smaller selections. Online gold retailers can provide lower prices due to their higher volumes. On the downside, it does require more research to find reputable dealers. Online stores can also give discounts to customers who buy larger quantities. Certain retailers give discounts for purchasing by credit card, while others do so for wire transfers, so be sure to choose the most cost-effective payment option. Finally, you can also bid on gold bars on places like eBay and similar auction sites. When shopping for gold on an auction website, it is important to review the seller's feedback. Look for sellers with documented negative feedback on authenticity. Look for people who are shipping it correctly, and there's handling fees and the failure to deliver. Let's talk about storage. Potential investors should also consider how they plan to store their gold bars. While it is possible to keep gold bars in a safe at home, many investors prefer to keep their gold in a safe deposit box or with a custodian. These services typically charge a fee but provide better security than a home safe. If you want to go the insurance route, then you might want to look into a couple things. If you do choose to store gold at home, you should consider taking out an insurance policy. In the event of theft, flooding, or other natural disasters, you may be unable to retrieve your gold. Also, unlike bank deposits, safe deposit boxes are not federally insured. In regards to purity, investment quality gold bars should be at least 99.5% pure gold. The rest is an alloy, usually silver or copper, that makes smelting possible. People who purchase gold bullion as an investment should only buy a bar that features the name of its manufacturers. Its weight and its purity, usually expressed as 99.99% stamped on the face, is also what you should be looking for. Popular mints that produce gold bars include the Royal Canadian Mint, Perth Mint, and Valcamby. When it comes to size, gold bar buyers should consider the ease with which they can liquidate the bars as part of their buying process. For example, if gold is selling at $1,400 per ounce and an investor has $14,000 with which to buy gold bullion, they will usually have an easier time selling the gold down the road if they buy 10 bars that weigh 1 ounce rather than one 10-ounce bar. They can sell the 1-ounce bar one at a time as needed, while they might have a harder time finding a buyer for the 10-ounce bar if they need to sell quickly. Considering the tiny size of a gram gold bars, investors sometimes save up to buy bars of more substantial size. Now let's talk about 6 benefits of investing in gold. Historically, gold has performed well during times of economic hardship. Gold is considered a store of value, which means that it tends to preserve its purchasing power during cycles in which fiat currencies are losing theirs. There are multiple alternatives to invest in gold nowadays that minimize storing costs and security risks. Gold is accepted around the world as a means of payment, and it can be easily exchanged for currency. There are multiple sources of demand for gold, which guarantees high liquidity and relative stability in price. Gold and other precious metals can be treated as a separate asset class, and therefore investors can use it for portfolio diversification. Just like any investment, there are some downsides or key things to keep in mind if you invest in gold. Gold holdings don't generate any kind of recurring income. For large quantities, storing costs can be quite high. Gold can be stolen and melted, which makes it impossible to establish prior ownership. Those are just a few of the downsides to consider. That was a lot. I just want to thank you so much for watching this video on investing in gold. As we discussed, gold has been a symbol of stability and wealth for centuries and has proven to be a reliable hedge against inflation and recessionary cycles. Investing a portion of your portfolio in gold can be a wise decision, particularly in times of economic uncertainty and when central banks have resorted to printing trillions of dollars. Whether you choose to invest in physical gold, gold ETFs, or mining stocks, it's important to consider your investment goals and risk tolerance. Ultimately, the decision of when and how much to invest in gold is up to you. I hope this video has provided you with valuable information on the benefits of investing in gold and the various ways you can do it. Thanks again for watching, and I'll see you in the next one.